Margin call. Have you seen the popular movie Margin Call in Netflix? Right? It's a very popular movie, and most of you may not understand what is margin call, but let's try to understand that through a simple example. Right? Margin call normally happens in futures and options contract. Let's take the example of a futures contract and try to understand how margin call actually works. Now Reliance, if I want to buy a future contract, I can buy in multiples of 500 quantity only, 500,000, 1500 and so on. I cannot buy any number of quantity I want, but I can buy only in multiples of 500. Let's take one lot. This is called lot size of Reliance. Let's take one lot, which is 500 quantity, right? Now we have taken one lot future contract, right? Which is equivalent to holding 500 stocks of Reliance. Now, if you want to buy 500 stocks of Reliance in the cash market, it will cost you 500 into what is the stock price of Reliance? 1428. Yes, 1428. 1428. It will cost you 7,14,000 if you buy in cash market. But if you want to buy in the futures market, so you buy one future contract which is equal to holding 500 stocks, and that will cost you around 1.26 lakhs, which is around 17% of the total money required, right? But the catch is suppose something happens to Reliance and tomorrow Reliance price falls by 10%. Yes, so 10% of 17,14,000 is into 10%, 71,400. You will still have a 17,400 rupees loss in a capital investment of 1.26 lakhs. Yes. So as a percentage loss, how much loss you will be having? 71,400 divided by 1,26,000. Yes. So you will be losing 56.66%, almost 57% of your capital deployed you will be losing. Right. Now when this kind of loss is happening, what will happen is the broker will ask this money, this 56% of the money, that is 71,400 rupees. This ask by the broker is called the margin call. Now, if the trader or the person who is holding the position is not able to give this 71,400 rupees, what broker will do is broker will close the position of the trader. Now, whenever such kind of big falls happens in the market, a big crash happens in the market, people are not able to provide this margin call to the broker. Hence, everyone is bound to square off their position, or the broker will square off their position automatically. So that means everyone will be selling their position, right? Everyone will be selling their position. Hence, the margin call triggers a big crash in the market. This is what happened in the movie Margin Call, and also this happens in silver most of the times. You might have seen in silver, we have seen a big crash 1 month back, right? Almost 20-25% crash in one day. That is because of the margin call, right? Hope you understood what is margin call. Thank you for watching.